Hi, this is Karey Brown. You're listening to Real Estate 101, and I am a real estate broker with eXp Realty. I always forget to say that, and it's going to get me in trouble one of these days. But I am here with Chuck Sutherland. Chuck is a real estate broker of his own firm, which is Sutherland Real Estate. He has written many books. Several of them we're going to discuss over this next series. You have so much knowledge that you are like the PhD of real estate. So I'm really excited to have him educate all of us. So how are you doing today?
I'm good. The only thing I would say is that I learned most of what I learned not in school, though I went to school and studied real estate. I learned it in the field. So the things that how to make good real estate investments and buy real estate on the right prices and terms is something you learn as you go.
I would say that I think that applies to all real estate. So we go to school for it. We take all these tests. We don't use hardly any of what we learn. Right. And, you learn it in their deals, and every deal is different. Over the years, I've sold well over 1,000 homes, and it seems like nothing's ever the same. So, every deal is different. Every personality that's attached to it's different, but it's still nothing like equity exchanging. To me, that is a whole nother beast. It's really fun how creative you can be. And that's what we're going to be talking about. So first off, you've written several books. I'm looking to the side because that's where they're at, but Creative Real Estate Formulas, Creative Real Estate Profits and Financing. Today, we're going to start with the Creative Seller Financing. I'm going to do a lot of listening because this is just going to be all you, Chuck.
Well, ask me questions. I'll be glad to start.
So say you've got a deal, like for instance, creative seller financing. Before we started, we were talking about you guys like to buy the things that nobody else really wants. And then you go out and you figure out a way to put all that together. Can you give us an example of what that looks like?
Well, I'll tell you a really early small example I started with, and then in my early days, and then I can talk about our most recent deals.
Sounds great.
So an example of buying something nobody else wants, and it'll illustrate one of what we call formulas. It's like a recipe. If you're going to go bake a cake, it's good to start with a recipe, and then you substitute off of that and add things and change the frosting and all that stuff. So you start with some formula approaches. So I'll talk about, when I say formulas, I'm talking about like recipes. And and I've been doing this for 50 years. So I learned these early on from people that handed it down to me like this, like I teach today. I'll just share one quickie thing before we really go too much further. In 2013, I got kidney cancer, and I had not written my books. And I decided I didn't want to, there was a time where I thought I might die. And I said, I'm not going to die without having passed along what knowledge I have. And I taught classes along the years, but I had never put anything down. So I started writing these books for that reason, so that I could pass along knowledge. Now, we beat the kidney cancer.
That's awesome.
100%. But now I have these books. So I guess cancer was a good thing that, some things.
It pushed you on, yeah.
Good things come out of what you consider as a bad thing. So, but early on, I started finding projects. The best projects I could find to invest in or develop were things that nobody else wanted to do. And I could figure out a way to make them really not just profitable, but really profitable. So there was an example. There was this duplex. There's a time where I was buying houses and remodeling them and renting them and keeping them. And I found this duplex, and it was a new construction duplex. And the owner was an architect and his wife. And one of the key principles I live by is that people are more important than property. People are more important than property, because if I don't understand the people and create a relationship with them where we can work together, then it's just numbers. And I just don't like working that way. And I can make better deals with people if I'm looking for what they really need, and I can find a way to make it work for me. And I'll give you an example regarding seller financing. So I like this duplex, but it was priced about 15-20% higher than the market value of anything around it that was a duplex. It was a new construction. And in learning about the architect and his wife, he said something that became really clear of what their motivation was. He said, and his wife wasn't with us at the time, but he said, when I built this, I told my wife we wouldn't lose money on this, and I'm not going to sell it for less than we got in it. Well, that tells me a man's ego is bigger than the Empire State Building sometimes, and he was not going to let his wife tell him he had made a mistake for the rest of his life by selling that property for less than it was worth.
Smart man, I guess.
Yeah. So we negotiated the we started negotiating. I said to them when I was negotiating with both him and his wife, and they had their broker was there too, and I already knew the broker, and we were they were pretty creative themselves, and they were willing to work with the people if we could figure out a way that they could get what they needed. So what I knew what they needed was they needed not to lose money. So I offered them their full price on the property, which was 15-20% above the market, with carryback financing on the first mortgage. I assumed it was pretty small. And then the second mortgage, I wrote it at 0% interest. They needed the price, so I could get if I didn't have to pay interest for a period of time, then I could afford a higher price and still buy it. And so I wrote it for 0% interest the first year, 1% interest the second year, 2% interest the third year, and on and on. There was a time when interest rates were 8%. And I put it in at 9% after 9 years, and then it amortized over 20 more years. So it'd be a total of 29-year loan.
Wow.
Right. And so the interest, I gave $1,500 cash down payment, which paid their broker. And they agreed to that deal because I gave them exactly what they wanted. They didn't want to lose money on the construction. And in truth, they did lose money because they overbuilt it. It's architect, and a little known secret is that architects always overbuild their own properties. They put too much into them that exceed the market requirements. They build this ideal monument to themselves and their architecture abilities.
I've seen that. Their walls are thicker than anything you would ever have to sustain.
Yeah. And so their motivation was pretty clear. So we signed that deal pretty quickly. And I had cash flow day one because I wasn't paying a second mortgage. I wasn't even paying principal.
Wow.
First year, 0% interest, no payments. So I had cash flow day one. So, and I liked it. It wasn't a huge cash flow, but it was a good cash flow. And I kept that property for about 3 years, if it was. And then the same brokers had this doctor who wanted to buy real estate at the time for tax reasons, for tax deductions. And so we structured a deal at roughly the same price. The fact is, I lost, and technically I sold it for less than I bought it for, but he gave me 9% interest over 30 years. And we wrapped the mortgage, which means I gave them what we call in Texas an all-inclusive deed of trust, so that it was a way that I paid the underlying mortgages. I mean, I sold it to him with an all-inclusive deed of trust, I meant to say. And that I paid the first mortgage, I paid the second mortgage, and he paid me. And he was paying at 9% interest. So I had cash flow from day one. that was higher than my previous cash flow. And he personally guaranteed the mortgage. And he didn't put very much down. I was fine with that. Personally guaranteed the mortgage, pay the real estate fee for his broker, and I had cash flow. Solved his problem. His problem was he wanted tax deductions, and because he was making so much money in his medical practice. And I wrote a provision in there because since my profit, and that I'm going to talk about my side of it, I'll talk about the other side. My side of it was I was making all of my profit by cash flow because of the interest spread. And I wrote a provision that he couldn't prepay the loan until it expired 29 years later.
Oh, wow.
And he signed that because he got what he wanted. Now, sometimes what happens is people after the fact decide that they need something different, and then they want to change the deal. So he came back at 3 years later from that and said he wanted to pay off the loan because he could get better financing. Right? And I said no. My whole cash flow is based upon you paying me. And he didn't like that, and didn't like that. That's all I can say. Didn't like that. But his situation had changed.
Mm-hmm.
He didn't need tax deductions any longer. He wanted to get a lower interest rate, so he had cash flow. So that's fine with me. And so he finally made me an offer to buy me out of that mortgage, pay me cash bonus to drop the mortgage. And it was about 10% of the mortgage balance, the amount of the mortgage. So it was 10 points, 10 points.
Wow.
And I really, literally, that probably was less than the value of my wrap position at that time. But again, people are more important than property, and I was going to be doing business in that, with that doctor maybe more in the future. So we ended up on really good terms. And so that's an example of a creative transaction where I say that everyone got what they needed to make a transaction. They didn't necessarily get what they wanted at the time they wanted it, but they got what they needed to make a transaction. Otherwise, it would never have closed. One of the reasons deals fall apart between buyers and sellers is that they actually don't write a deal that satisfies their needs at the time. They write a deal that somebody else thinks they should write, like their sister-in-law or their banker. So they write these contracts that don't work, and because you can't get financing based on how they're structured. And stuff. So I pay attention to people, and for the most part, I do multiple transactions with the same people over a period of time, because we almost always end on good terms, no matter what happens. So that's an example of my first big, first real estate transaction, and I never would have done it if I hadn't learned what I'm talking about today from somebody else.
Right.
About structuring, financing terms. And I walk through some examples of that in my book, and I think that's one of the examples in there. So that's an example of the kind of way we work in the transactions. When we say equity financing, it's not necessarily always equity. We call it equity exchanging, or we have a lot of ways we describe it, but it's equity marketing is one of the ways we describe it, because you don't have to have money to go buy real estate. I have $1,500, right? So you don't have to have a lot of money to start investing in real estate if you can structure a deal that fits what you want to do. You just have to have a desire to go buy and invest in real estate. And then you can figure it out as you go if you're working, according to these kind of principles. So that's one example. That's one example of creative financing, and I can tell you, 50 examples that we've done over the years. But you can also talk about. Go ahead.
Just to give an idea, especially to somebody that's just starting out, like you said, you had $1,500. how many trades or how many properties have you invested in over the years that has been basically the same thing? I mean, probably hundreds at this point.
The same kind of transaction.
Yes.
You know, I've done, I mean, I literally have done I've done hundreds of different transactions. We've done a lot of development over the years as we want to buy something bigger. So I did duplexes and houses. There was a time for that. And then there was the next phase, which was multifamilies and commercial buildings. And so it's over time, we've done hundreds of creative real estate transactions, almost always with the same people. You know, like many times with the same people. You were talking about what we've done recently. We just bought a property in Pensacola, Florida. And I'll share more about that. It was kind of an amusing transaction, but we had investors there that came with us in the deal, because I like to have partners. I want to spread around my money into different deals, and I want to have partners because my partners keep me honest and give me advice and ask me questions and that I have to answer in order to move forward. And I find that it sharpens my skills if I've got partners in a deal. So we had I think 5 partners in our last transaction, other than my partner Judy Brown, who's my operating partner in Florida, and she's the one who runs the show on a day-to-day basis. And those 5 investors came from our previous deal in Lake Placid, Florida. In other words, they're the same people, satisfied people, happy, and they came with us on the next deal. And they made a ridiculous profit in Lake Placid. One group made 57% of the return on over 18 months during a pandemic, and the other group made 74% on their piece. And what we did in that was they brought in cash. We bought part of the property for all cash. Because we couldn't raise all the money for the rest of us, so they got seller financing for 97% of the rest. So because the sellers were motivated, we gave them what they wanted, which is out of the deal, because they weren't even in town. They were in another city and didn't know how to run this kind of property. So some of those same investors came over with us to the next deal. So that's an example of if you really are working with people, how important, it's important actually to build those relationships. I've heard so many people complain that they call a real estate broker to, one of these people that have
We're having a little glitch here. You've frozen.
Try to back it up just a little bit. So let me collect my thought here.
We had a little glitch, so we had to pick this
we had
back
a little glitch.
up. So.
Yeah. So people, we're so concerned with our investors that's why they keep coming with us. And real estate brokers, I do so many transactions with exactly the same real estate broker over the years, brokers. And we've got people, and I'm a member of 2 really great organizations, national organizations, where we meet every couple of months and work on real estate deals for 3 days. And we have 100 people on average go to a meeting, and we spend 3 days working on real estate deals. And some people are buyers, some people are sellers, some people are tenants, some people want to partner with other people. Some people are developers looking to buy property to develop. And so it's a great organization. So we tend to work with each other over and over and over again. When you have a good relationship, you want to continue to work with the same people.
Absolutely. So, just going into the meetings, everybody knew everybody. You guys had great relationships. The NCE that I've been to, Chuck is also with the it's SCE. Is that right?
Yeah, it's SEC. So we have not the government organization, the Society of Exchange Counselors is one of the organizations. It's been around for 60 years. And the other one is the National Council of Exchangers. It's been around not quite as long, like 45 years. And there's typical meeting. We'll have like I say, around 100 people there on average at one of these meetings for 3 days, and it's a great way to go and learn. But you want to learn by trying to do something that you really want to do in a transaction. It's the way you best learn. Courses are good, but you got to go put them to work.
Right. So before we got our little glitch going on, so Chuck is like super clear. I am not. I have yet to figure out what's going on with it today. I swear I'm not filtering myself. There's really no filter, but you know what? It's not bad.
No, but you're talking your visuals. Your visuals.
Yeah, my visual's pretty bad. But before we had our little glitch here, you were about to go into the property that you guys recently bought in Florida, which is a funny story. And yeah. This is kind of a heavy conversation, so I really do think you should share the funny part.
Yeah, I will. So we this is a property that we actually my partner discovered, went and visited the property, and it was a nudist RV park, and she said she was when she went to inspect it, she said she was kind of traumatized by the inspection process. She said there's things I cannot unsee.
I bet not.
and so she was like, but at the same time, she developed a good relationship with the seller, who was a cranky old guy, and he was kind of cranky, but he had a girlfriend, and my partner was she's willing to listen and not judge, because if you judge people, it's very hard to make a transaction if you're judging somebody, because they know you're judging them.
That's in any transaction, absolutely.
So we bought that. We contracted to buy. We told them we'd buy the property. We had terms laid out, and he had to go out of town. And it's a really kind of weird story, because he took Judy, my partner, to visit his shaman, because she had to wave the magic wand and say that she was okay to deal with. So the seller had some little kind of crazy shit going. Crazy stuff going on, So anyway, so the shaman said fine, and then come out that he's leaving the country to go to Colombia to look at a piece of property down there, and she says, "Don't go. I don't think you're going to come back." And he said, "Don't worry, don't sweat it. I'll be fine." He goes down, he gets COVID, he comes back and dies.
Oh wow, she was right.
So, it was a little spooky, but we had this good relationship with not only him, but with his girlfriend, because Judy, thinks the same way I do about that. We developed relationships. So they talked on the phone a couple of days later and crafted out a deal that we could do that would work for them and work for us. So they wanted more cash as a down payment, so we gave more cash but lowered the price. So and they said fine, because they were trying to settle the estate, and they agreed to do that. And there are not too many. Sorry. Not too many. There's not too many. Not too many buyers for nudist RV parks. So anyway, it is funny, isn't it? Yeah. So we actually, I never saw it until after we bought it. That's how tight Judy and I are thinking and how we look at things. We talked about it a lot, had a lot of pictures, did the demographics. We did the analysis of competition from here, and so we bought it, and went down and we got all the nudists out before we took possession. That was our deal. We had to get all the nudists had to leave before we took possession. So the seller got all the nudists out. We ended up buying, I think, one of their RVs because they couldn't get it started. And that was the only way that was going to happen was to, in fact, we bought one, and then we helped the other person who was in the hospital. We helped, we paid for it to be taken to a mechanic, towed to a mechanic to work on. So we buy this property, and we put up a sign. I went and got a sign. I went down there and looked at it in November, And I went down, we went down and got a sign, which we posted on the walls of the gates coming in and on the sign out front that this park is, the name of the park was Riviera, I think Riviera Unlimited. Riviera Unlimited closed permanently. Vacay Village of Pensacola opens spring 2022. Clothing required. And with 2 smiley faces on the sign where it said clothing required. And we still have people come up and want to check in. So it's fortunately we have the gate that locks. So, but the bottom line of it was there are not very many buyers for that kind of property. We structured a deal that worked for the estate and for the not only the executrix, which is an amazing name for the woman executor of an estate, and her attorney. Everybody had their needs that they wanted met in the transaction. So again, we made that transaction. We're right now remodeling the whole property. And we'll open in April of this coming year, remodeling, everything, because it was very neglected, and everything that was done on it, much of it was what's called jerry-rigged. It was just halfway done right, halfway. So, but that was an example of, we bought a property that nobody else wanted. We structured transaction with the sellers and then the estate, and that worked for everyone. We got seller financing in it. We got a $600,000 seller financing transaction that amortized over 20 years and balloons in 10, and we got interest only for the first 6 months. An example of how you structure a deal inside of a good relationship with all the parties involved. So we didn't magically come up with the terms. We went and talked to the seller, the original seller, before he died, and then the estate representative, the executrix, after he died. We just negotiated stuff from the point of view of, what do you need? How can we make that work for us? Not like we sacrifice our needs. We modify how we get what we need through working with them. And most people can't do that. Most people don't do that.
Right. And they probably don't even realize that they can. I mean, you're so used to like a regular real estate transaction where everybody goes to the title company, seller gets paid, buyer gets the property with a new loan. It's so granular compared to this. You had how many people involved in that transaction?
This last one? Yeah. Well, we had Judy, who's my partner, and me. We had 5 investors with us that came along. We had, so that was our side. And then we have an employee. It's going to be the on-site manager there, and manager maintenance guy. And so we brought him over. And then, of course, we have and I included these people in our transaction. We have our bookkeeper, who's in Florida, which has done work for us for 22 years. We know them very, really well. We have the bank who we work with, which is South State Bank in Florida, which we have great relationships with them. So there's that side, and then there's the seller. There was the executrix of the estate. There's the attorney for the estate, who was really doing all the advice, and then there was three beneficiaries of the estate. So all this had to work for everybody involved.
And the shaman.
And the shaman. That's right. The shaman. So it was, so some people have, some people are a little out there, in the sense of not like standard normal real estate transaction. But the truth is most people are somewhere on one side or the other of the bell curve of whatever normal is, So you really have to adapt what you're doing to people you're working with.
Right. I keep giggling so much because when he was telling me the story earlier, he then in turn referenced it as a hairy deal.
Oh, I'm sorry. Yeah,
I just can't get it out of my
yeah.
head.
Sorry. I apologize for that. We, yeah, we call
I love
things
it. It's funny.
we call things that are properties that are complex and have a lot of issues. We call them deals with hair on.
With
You
hair
know,
on them. Yeah.
so so yeah, it was
And I'm still stuck in
erase,
the notes. So sorry.
erase.
I'm trying. So clearly you can go into these deals and, bring in partners. So obviously having partners, you've got to really trust who you're working with, because that can go sideways too pretty quick if you're not really careful of who you're doing it with, right?
Yeah, I've had some really great partners over the years. I was sharing with you earlier, Kobe Sandlin out of Wichita, Kansas was we were partners on self-storage in the South. He's got many more projects and is around the country, but we were Texas and Oklahoma, Louisiana. And so we did some transactions down here, built some properties as well. And he's a great partner, but I've had some partners who were
On the bell curve.
off the other end of the bell curve. We had one guy, we actually lost money, my money, not investor money, but my money in about right before the big recession. And this would have been 2008. And we didn't realize was, we had a good referral, but we didn't realize he was a little mentally challenged, in the sense that his brain was not functioning like anybody else's brain. He said God was talking afterwards. He said that God was telling him what to do and was telling him to lie and tell people all kinds of stuff. This guy was definitely a little out there, and it was like one of these
Off the bell curve.
people walking around who you think what how they operate, and they have a whole different way they think. So it was a hard lesson, but fortunately, you make some partners you really want to vet, really want to work with them. And that was one I relied on the recommendation of somebody I also trusted, but it didn't quite work out. Now that other person is still a partner of mine, but you really have to do your research. But a good partner, I won't do a transaction without a partner. I just won't do it anymore, because I can't see what's behind me.
Right.
Right. I can't see everything. And I rely on people's opposite opinions sometimes. I want them to see things I can't see.
Right.
And that's what my bookkeeper does all the time. She's always saying, well, why did you do this? What are we doing here? Because she's not in the real estate side, she's in the bookkeeping side. So her asking me these hard questions, keeps me like clear. Why did we do that? Why did we do that? And so I consider them her partner, even though she's an employee of ours.
Right.
So we like partners, and we'll continue to work with them. That's another formula, you could say, a recipe, which is have partners in your transactions. And one of the things that in these organizations, a lot of us will partner with each other as well.
Which is really interesting to watch, and just be in the room for at these meetings, because the ones that I was at, I presented a really large property and I was told to break it down. So we did, but it was, and still probably not enough even. Broderick J. presented it for me several times too. And it really is an out of the box kind of thing whenever you get into that many properties, because no one person seems to have the funding or even want to try and do that all by themselves. And the brokers were bringing offers. I mean, before I left that day, I had 11 to present.
Yeah.
And each time Broderick presented, we had something, we had at least that many. So definitely creative, out of the box,
Yeah. These meetings are like 3 days each, 2.5 days, 2.5 days stretching into 3 for the diehards at the end. Mm-hmm. But we work on real estate transactions for 2.5 days, and we can do that because we have ground rules that we operate from. We We have very, what I would call stiff ethics requirements, because, you know, you don't go do a deal behind somebody's back, as an example. It's everything straight on, above board, on the table. And so we establish a way of relating with and working with each other built on trust,
Right.
you know. And if the trust breaks down, the deals will break down, and those people tend not to come back. Just doesn't tend to have people that you can't trust in a meeting. So we have 100 people working on real estate transactions. Some people are investors, some people are buyers, some sellers and brokers, and then developers. There's value to be found for everyone. And we'll have somewhere in the world, our highest record at a meeting was over $1 billion worth of real estate cash represented in the deal.
Wow.
In the meeting. And lots of times it's in that $600 million range of total people and money and property there. So it's a very, we love working with each other and being creative and coming up with ways to make transactions. And I've made transactions I could never have made by my own, and vice versa. I brought things that other people couldn't do on their own.
And the really interesting thing about that is it's by invitation only. Is it still by invitation only to get to the groups?
Yes, both of those groups are invitation only. And we're mostly, and you have to be licensed and to come during these meetings. And the reason is that there's lots of confidentiality requirements in different states, and they vary all across the country, that you only can do that with a broker, have those confidentiality kind of transferable agreements.
Right.
So we were brokers and salespeople, and so we work really hard, and for 2.5 days we go home, and we have education before each meeting. We have Society of Exchange Counselors. We have a one-day education on the Sunday before our meetings, and then the National Council of Exchangers, NCE. We have a one-day education we offer for free in that organization on the Monday of our meetings.
And you want to talk about a tired brain? That education portion of it, man, it stretches you.
Yeah,
it does me. I'm not as advanced as you guys are, but they were talking about trading with paper, so life insurance and things like that, trading all kinds of things, art. Mike Strand was telling me a story about some art that his dad had a Rembrandt, and they had actually traded that for property. And it's just very much outside of the box.
Yeah, so it's the key part is, what do you need to do to make a transaction work for everybody? Change is also during different economies. So right. During a recession, there's not as much cash and financing around as during good times. So it tend to be a little more outside the box in terms of that area. But right now, as I shared with you earlier, there's so much cash in the marketplace. I mean, literally, there's this huge surplus of cash that's come out of financing from federal deficits over the last 30 years, and then from the Federal Reserve building up digital currency to buy corporate and treasury bills so that they can support the rebound of the economy. And so there's just so much cash chasing deals that, but still many times it's seller financing. Sometimes is an example of what really does. There's a lot of that in the marketplace right now, because there's certain properties, like the deals that I was talking about, that have hair on them. People.
You just sent me right back to it.
I know. Sorry, but but those kind of transactions, you can't make a straight transaction and necessarily have everybody get what they need to make a transaction.
Right.
Because if most buyer and seller transactions in the regular marketplace are like just pounding on each other, bang, 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 like, too high a price. No, it's great price. You just battle over price until they kill each other, one gets beaten into submission and closes the transaction.
Right.
That many times means no deal happens. You see properties on the market for a long period of time, it's because they couldn't find a way for the buyer and the seller to come to combination on it. So, I love working with the creative approach because there's ways to make transactions that you could not make normally.
Absolutely. So we're going to end this segment of it. We'll be back to do another. But some books that you should read that Chuck has written is Creative Real Estate Formulas. Do you want to give like a real quick skinny on what that book is about?
Well, it's creative. That's a general description of it. It's Creative Seller Financing is the first book, which is on seller finance. It's basically using seller financing to buy and sell property. And all these books are on Amazon. I have them on. They're coming out in a second reprint, second edition in about a month and a half. But they're available on Kindle. All three of my books. Creative Seller Financing is the first one, all about seller financing, and with down-to-earth, simple examples. Simple. When we're talking, and I had to rewrite that thing like 6 times to get as simple as I needed.
I bet.
And I had a legal assistant to an attorney who did a rewrite or edit on my books on one of the edits, and she called me up and told me that this is too complex. I can't figure out what you're saying. I knew then it was too complicated. So it's simple examples of real life transactions, not theoretical transactions, real life. So that Creative Seller Financing is the first. Creative Down Payments is the second, and that's about using something other than cash to buy real estate, and maybe in addition to cash. And then the third one is Advanced Creative Real Estate Financing, which is what we use more in the commercial areas today. So that's those are the 3 books. They're on Kindle, like I say, right now as Kindle books, and then they'll be out in Amazon on printed books in the let's call it the early spring.
So our next segment, we're going to be doing creative down payments. So he's going to go into ways to do that. So be sure and subscribe to the YouTube channel. Again, you can go out and find these books on Amazon. I will post those in the comments so that you'll know how to get to them, and I'll try and find a link to do the same. Or I will find the link.
Or you can actually go to Chuck Sutherland on Amazon.
Okay, perfect. I'll make sure that I link that so that you'll just have it readily accessible. So be sure and join us. We'll be back to do creative down payments. Thanks for joining Real Estate 101.